Good evening, everyone, and peace to Christ to all. I hope everyone has had a good week trading this past week, and I'm sitting down this weekend on a Saturday to do another weekly review and go through what I saw in the previous week and some of the trades I took. Now, a lot of people I saw, well, maybe not a lot, but I saw some people definitely got chopped up, as I imagined a lot of people would probably get chopped up. If you look at the daily chart, you can probably guess as to why this previous week was a very hard week to trade. And the daily chart right here, you see the past 4 days. We have Monday over here, Tuesday, Wednesday, and Thursday. What you can see here is that price action those 4 days, Friday being a holiday because it's Good Friday, and then there's Easter on Sunday. Price, a lot of consolidation. Okay, we've spent Thursday, a very choppy day Thursday, staying within Wednesday's range. Okay, and then Monday left a range, Tuesday traded to the high, Wednesday traded to the low, and that's really all the excitement for the week. There was nothing to do with Thursday. As soon as we traded to that low and we've rejected, came back up, I knew Thursday would be boring and it wouldn't expand anywhere. Okay, I was looking at that high there, and I was seeing SMT with the ES and the Dow, but there was also bullish SMT mixed with the bearish SMT. Another sign that we're not really doing anything and prices are just creating liquidity in a consolidation. But I do expect this price action to loosen up. Every time you see a consolidation, you should see it as, you should look forward to what's coming next, because it is meaning that price is going to loosen up soon. It's going to be violent. It's going to move a lot better after the consolidation. So price is never doing nothing. If it's like this, it's because it's getting ready for bigger movements, and that should excite you. It should make you feel better. And this is hourly chart, so I have Sundays open delineated there, to Thursdays, or to the next Sunday open. You got Monday, Tuesday, and Wednesday. Each of those 2 days open, like when the daily candles started trading. This one's at 19 at 7 o'clock at 19. It should be on that candle there. But one thing you'll notice is the repeating nature in price action. In these weeks when we consolidate a lot, you start to really see the same thing happen over and over again if you really look into it. You have consolidation, right? You have a run underneath or above that consolidation, and then you see the opposing end of that consolidation be hit. So this the same thing happen over and over again. Like, for example, in the first one over here, we ran above that overnight consolidation, or that was partly overnight, and we ran to the low of it. We consolidated some more here. We ran to the low of it during London session, or actually this was the end of the day Friday, and then we ran above the stops in the afternoon, and we failed from that level, retraced into the order block there, drew lower down to not quite that fair value gap, that big green empty candle, but the wicks in between. And you could try and think of why I'm highlighting this area, because when you have these wicks that are painting over each other, if you look into the smaller time frame, this is an hourly chart, so maybe go on a 15-minute chart, you'll probably see a down close candle. And what that is like an order block. It's like this up close candle over here, which resisted price when it retraced into this big up close candle. All right, that is seen as an order block in lower time frame. So I highlight these areas because they're areas that could have bullish PD arrays, which could support price. So I highlight them, and we went back up, consolidated some more. Again, notice the time we consolidate. It was during Asia and London around 3 a.m. is when we started to make a run above. In the morning, we reversed and we delivered lower to finish off the day. We consolidated some more. overnight again. London started trading higher, reversed in the morning around 9:30, and then we dumped lower. End of the day reverse, retraced back into this price action, consolidated some more overnight. London made a low and then a high, and then the morning reversed. Well, the morning traded above and below all this price action. You see those wicks on Thursday. It's really not that pretty. Price is going all over the place, and it's very volatile, but at the same time it's very restricted. It's very restrictive, and that's one thing that can lead you to believe that the markets truly are manipulated. There's a manipulated nature, because think about it. Yes, it's Thursday, it's a holiday, and Friday, it's Easter weekend. It's true that many people, many big pockets may not be on the market. However, price is still moving with speed. There's obviously a lot. It's not like it's not moving. Obviously, it's making these big ranges. It's covering, dozens and dozens of points within a smaller time frame, going up, down in a smaller time frame. It's just being restricted. You can literally see it here, that there's something stopping price from expanding in a single direction. And that's because there's a bias to be met, and that bias is that it's a holiday and there should be less money on the table. So price is being restricted by the algorithm which manipulates the market. But I don't know. And anyway, you have SMT. So this is the the Dow, which is making higher lows. So you see, you take that low and this low, you see the Dow made a higher low. It'd be easier if I show you, but you would take the highs, and you see the Dow actually made higher highs. So it was SMT going both ways. The Dow trending higher and the Nasdaq trending lower here. Okay? And whenever you see that, this is a huge SMT, but whenever you see that, usually it's telling you that there's institutions are getting into the market at different areas, and it's causing manipulation in the market, which leads to reversal. Every time there's a reversal, you see SMT, like one indice that are closely related is going to be trending in one direction, the other one's going to be doing something else in the opposite direction. But we've had SMT for the past weeks, so we haven't really been going anywhere. We've just been consolidating. So I just think that price is they're restraining price right now, and there's not much institutional sponsorship in the market. So that just tells you something, that obviously price, if it's in a bigger consolidation and price is never doing nothing, it's just waiting for something. What that is, I don't know, but I am anticipating more volatility soon. Because look at the daily chart, right? We haven't expanded in a single direction. We've just, since really the March, we've just consolidated all month. February we went up a little bit, right? From down here we consolidated pretty much for half the month, but we did start February and end February going higher, and then that wasn't bad. But the month of March, we literally just opened up around it was like 500. No, maybe it was like I think it was 366, and just literally ended at 100 points above that opening. We didn't really do anything. Okay, so there's lots of liquidity at the high and the low of this month. All right. So Monday was on the hourly chart. Let's just look at it over here. See, we went down all evening, and in the morning, all I could think of was retracement. So when in the evening and early morning during London session, price is just going in one direction, where is the liquidity? It's not going to be lower. People are going to have already participated in this move, and their stop losses, or people waiting for price to retrace to be at a bigger premium to short, to go to enter into a sell. They're going to wait for price to retrace, and that's going to create more liquidity, and it's going to get some people on buys, which will leave liquidity at this low. Okay, which is why when price comes back to that low in the future, on this would be Wednesday, it hits that low and then it comes right back up. So price, I was looking for a reversal. And on that Monday, you see we have the midnight open over here. We make a high and then we expand lower. And during the morning session, we start to go down ahead of 9:30 open. And when 9:30 opens, we shoot it down one more time. The S&P 500 at the same time makes a higher low. And I saw this on the S&P 500. And when I saw that higher low, I decided that, okay, it would be better for me to go over to the S&P 500 because the Nasdaq made a really, really deep low. And usually that's a sign that it's not willing to be as explosive. Not all the time. Sometimes it will be just as explosive, if not more. The Nasdaq is a very high volume asset that moves a lot, right? But I was looking for one deviation of the range that dipped into that that discount. You know, it was this. I didn't have this level at that time, but price reversed, got above this range. And as price was reversing at 9:30, getting above that range, I would wanted to go long, but I didn't see anything really in the Nasdaq that I liked on the lower time frame. So I went over to the S&P 500. I saw that fair value gap here. The S&P had started to form, and as the S&P really started to manifest itself, so you have the 9:30 open around, I believe, on that candle. The Nasdaq, as we saw, drew lower, but the S&P 500 stayed higher, and that purple line is the divergence between the two. And I just would have preferred to go long on the S&P 500. So I found, once the S&P was visible, I found a reverse fair value gap on the 1 minute chart that I used along. I aimed for not this high. I aimed for just originally 10 points, and I closed my short around here because this is just a retracement. It's not necessarily a reversal. I am marking higher time frame, buy side places of liquidity. This is not that I think that it will have to go there, but it's just a place that it can go. Okay, but however, we're Monday, and there's a lot of restriction in price. There is a huge bearish morning, so it doesn't necessarily have to go all the way to that high. Ended up, I sold when I saw a little bit of consolidation, and we got above, like here, this is a turtle soup short. So you see how price consolidated, drew beneath this low, and drew higher. It's the same thing up here. So this consolidation, run below it, expansion, consolidation. And when I see that consolidation, I take the high, draw it out, and price gets above that high, and that's a signal to get out of the long. And then I went short actually on a smaller time frame in the seconds chart, and drew and closed my short on that down close candle there. So I made up for the points that I wanted to go for, which is 10 points. Instead, I only got, what is that, got in like at 80. It doesn't make any sense. Oh, about 5 points. I got like 5 points plus maybe like 2 or 3. But and it just kept going up slowly for the rest of the day. In the afternoon, though, was the really good time to trade. So in the afternoon, watch how once we get above this high here, it's a short-term high, above one deviation, we consolidate a little bit inside. In the lower time frame, you'll see a consolidation. On the 15-minute chart, it's just 2 down close candles, and we get above that consolidation, so above this high there, and then we reject lower, leaving a fair value gap. In that 15-minute fair value gap, I was watching for a run back into. The question is, where do you target after that? Well, there's this low there, which is a long-term low. Long-term low, you have a higher low to the left, a higher low to the right. That 3 series of swing lows, right, that forms the middle one, which is the lowest low. On the higher time frame, that's going to be a visible low. And we know that price constantly looking to hit these highs and lows because that's where all the liquidity is. That's where people believe the market structure, and that's what people believe makes the trends and breaks the trends. But that's just what the places that houses the most liquidity. So once we got beneath that low, price turned and drew higher. I could have also aimed for the bodies, the body there, instead of the wick, because the body tells a story and there's still going to be just as much liquidity at the body. You would probably see price consolidate a little bit when it got to the body and then resume to go down to the wick. Sometimes it even retraces a little deeper. See here we got that run on stops that I talked about on the 15-minute chart, how we consolidated. We got above that high there, above this high, so draw that out in time. And that's this right here, how we got above that. We declined. There wasn't really fair value retracement to really go short on. You could have went short on that order block up there at the very high, or you could have just went short as soon as price crossed above that high. And price continues going lower, consolidates a little bit, retraces back into the fair value gap on the 15-minute chart, does the same thing, leaves a high, starts to draw back a little lower. Notice how here we've had sort of like the same thing. We've had a little bit of consolidation, a low there, price gets me at that low, retraces. So people seeing these big fair value gaps, seeing this explosive price action, they might be thinking in their heads that, okay, price went up in the morning, overnight went lower, it's lunchtime, let's go for a lunch break. And then they come back on in the afternoon and they see that price is starting a retracement on that lunch range. There was a bit of consolidation there at lunch. It could have been resistance. Now that resistance could have turned into support. So a lot of people are probably buying the retracement. And this, the retracement, the move lower, the retracement, which is the move higher into the 15-minute fair value gap, that is probably seen as the way you can think about it is you probably see that as people getting in, believing that this price action is going to continue going higher. It's just another idea that can present more liquidity in the marketplace. And that's those instances are going to be when there's a lot of things that go for this move in the retail logic is when it's going to be the most violent. As you saw here, there isn't a single up close candle. And it's probably because the morning had traded higher that people believe that the afternoon would just be a retracement and then a continuation from the morning. But no, it reversed and it stayed within a range. In other words, it's also hinting that it's a very choppy environment. It's a very tight environment where there's seek and destroy conditions, where price just looks to trade to the every close short-term high and low and just tries to make it so that no one makes money. And that's exactly what happens on these holiday weeks. Now we'll go to Tuesday. So on Tuesday, we have more SMT, smart money technique, with the Dow at the high in the morning around 9:30. The reversal gets created again. Okay, so you have a little bit of consolidation. A nice high gets left up here. Price gets above it, consolidates, gets above it again. And then the SMT starts to form as this decline occurs, which is around 9:30 open, or right ahead of 9:30 open. I believe it was 8:30 news. That's 8:30. But as this prices retracing here, retraces back into this big order block there, those two up close candles. And this is where you start to see the smart money technique with the Dow start to form. So the Dow is trading higher here, making a high above this high. And price declines on the NASDAQ, continues to decline. And we consolidate a little bit more. And as we're retracing back into these up close candles, into this range that was left, we have a little bit of consolidation, a run up above these highs here, and then another decline, leaving a 15-minute bearish fair value gap. The afternoon, once again, is very violent, and it goes lower. And it goes lower towards this order block. There's sell side liquidity at this low, and I was really just looking at all these lows because they're all relatively equal. This whole consolidation, I was targeting the low of that consolidation. But you can see as price is failing to go higher in the S&T is very clear with the Dow, you can anticipate that price is going to want to turn and accelerate lower. Now, keep in mind though, there was still a lot of liquidity at these highs because it would left a little slant, and we didn't really have a big run on, at least not from this time frame. We didn't have a big run on liquidity. But if you go to the higher time frame, overnight, what did it do here? Remember on the hourly chart, I showed you on the overnight, what did it do? It consolidated and price ran above that, above this high. So on the higher time frame, we are indeed wanting to reverse and to turn, go the other direction, back towards the lows. So that's what this was doing here. It got above all this consolidation overnight, and then you can play around and look for shorting opportunity on the smaller time frame. But if you would just know the bias and you understand that price is one drew up to a premium, so now you look to get back to a discount underneath these lows, you already are in a better position to find more success than if you were to look to go long, because you are with the day's bias, where the day is most likely to go. So even though it's choppy and it's retracing a lot, it's very slow, very difficult to sit in a trade and to see it go your way. If you position yourself short and you're right on your bias in these conditions, you can get nice trades, and it's just takes a little more effort and patience. This is the trade I wanted to take, which was against the daily bias. Of course, as I just talked about, going with the daily bias. The trade I took on this day was against the daily bias. But let me break this down. You have the 15-minute chart with sell side liquidity down here. So this was the one of the overnights low. I was watching that 15-minute fair value gap. You know, I don't have it highlighted on my chart, but it's this one right here. So price drew down into that, left this short-term low, and then consolidated a little bit for 2 candles, and price got back beneath that. Now, I wasn't looking to go long at 9:30 open, because you notice 9:30 opens up, and we consolidated like this ahead of this move higher, and then price got beneath. Normally, I'd be looking to buy these lows, and I'd be looking to go long. But because 9:30 hadn't occurred yet, oftentimes 9:30 will, it can sometimes just accelerate and continue going higher. But other times what it will do is it really quickly, in the first 5 minutes, it's just going to, one more time, just seek below. I have it happen to me many times where I'm in a trade, I'm anticipating a reversal. The reversal occurs ahead of 9:30, maybe because of 8:30 news, and then 9:30 one more time takes me out. It ticks me out my stop loss at these lows, and it comes right back beneath these lows really quick. But look at where the bodies are. The bodies are staying way above these lows. That's bullish. It's telling you that 9:30 just brought a lot of people in the market. It one more time went beneath these lows to fool people as the new volatility gets injected into the market, and more orders get filled in that market once the market opens, right? That's all that's there for. And then we start to resume going higher in that proper direction. I waited for a retracement. I noticed how there was up close candles that were failing. There were bearish fair value gaps. I know a lot of people are probably shorting this, thinking this is a Judas swing, but I'm looking at the higher time frame, and I'm seeing that okay, there is SMT, like very faint. Yes, actually, that's a lower low on the Dow. That's a higher low on the Nasdaq. There was a bit of consolidation, and there was a reason to suspect that we were continuing to go short. And then when this happened, I knew that this would trigger a retracement. What I'm also looking at is, even though we did retrace back into this fair value gap, into that order block, do we have a turtle soup short condition, right? Turtle soup short or long, that's basically this dotted line there. There is no dotted line over here, not yet. So you see, that's the trade I played part in, sorry, right here, right? We left this high at the order block, came back down, retraced, I got long, there's a order block there, and then one more time it went higher above this high to create that condition where now it's ready to expand lower. So one more time went above and then expand lower. So my take profit was just above that high, around 30. Well, I wasn't looking for 30 points, just above that high, and then boom, it hit. See, I could have been. It would have been better for me to position myself for the. I don't know if I show. No, not on the lower time frame. It would have obviously been better if I would have positioned myself for the move lower. But I don't know if I've said this before, but I play basketball usually at in the mornings and afternoons, and I don't know. I if I can get in for a trade ahead of 11, I'd like to be able to do that, so it gives me more time to get ready. But see, the SMT is continuing to show itself, but we are also failing to make new highs on the Dow. So there's double SMT now, and that can invalidate the bullish SMT. Then the afternoon occurs, and afternoon was very violent again, right? We have the retracement back into the 15-minute bearish fair value gap, which doesn't quite get to it actually, but it rejects, retraces, rejects again. Okay, this is the main thing you really want to pay attention is not necessarily the 15-minute bearish fair value gap. It's all the consolidation in this area. So all of this consolidation, all of that choppy price action. Price gets above that, cleans it up, and that those dotted lines, that's a reversal right there to run lower. Okay, that's what you want to focus on. We'll go to Wednesday. So Wednesday, I remember Wednesday was again another very tough day to trade, and actually now it's getting increasingly tough because it's approaching that holiday and price is just dying down more and more. But I did anticipate a move lower at 9:30. It just occurred. It didn't give me an entry really because again I don't like to trade ahead of 9:30, and those run-on stops that you see there, right? That is a retracement back into the range that was left from the previous day that expanded lower. We retraced back. We had this is the hourly chart. So one whole hour, a bit more than an hour of just consolidation, leaving that high there, draw that out in time. Price gets back above that high, and then it's ready to go lower. So it leaves a huge down close candle. That's a 9:30 open. And you can see by the time I was ready to take a trade, which is usually around closer to 10, price is already way in a premium. It already went much lower, and I just was not comfortable with looking for shorts ahead of like 9:45. It wasn't really my model there. So our price was just too volatile. Maybe the risk was too much. I don't remember. I don't have a 1 minute chart here to look, but it just there wasn't anything I could trust that was that lined up with my risk parameters. So I decided to go for something a little more conservative, a little less, and I only held this for 20 points, not the whole 30 points, but basically I saw this 5-minute low, right, leave this low, one candle consolidated, and we got back beneath that low and reversed higher. Okay, at the same time I'm looking at the higher time frame, and I wanted to see the same thing occur on the higher time frame. If not this chart, this indice, I wanted another indice like the Dow or the S&P 500 to make another move lower beneath this low. So that would be SMT. But the idea was that we would try and retrace and get back down in this range. Okay, and we wouldn't want to retrace just yet because it's, well, if we do retrace, things if we do start a retracement, what would happen at these short-term highs here? Every time that 5-minute high there, we wouldn't be getting above that high and then leaving this big down close candle. When price is bullish and every time it meets a swing high, it's going to really want to expand above it. It's going to want to really get above it with speed and distance. It's going to close much way above it. And instead here it just got above it a little bit, consolidated above it, and then drew lower. And so I got in at the order block. Price went back up, tagged me in to the trade, and then I looked for 20 points again. It went to my target, but I wasn't worried about the 30 points. I just wanted something small, and I got out as soon as it started to move a little quickly down to those 20 points. Actually, it was 25 points, maybe, if I'm not mistaken. I don't know. But yeah, you have your X there, that those run-on stops. That's what the idea I was going in with. It did not go there, but that's just the idea behind the bias that I had for that morning. And you had those run-on stops over here, which I was watching. And this is the whole day. So you see what happened the rest of the day. Price, this is the trade there I got in on. It came back up. Then it used this up close candle to consolidate. It got beneath this consolidation, right? Got beneath that consolidation, and then consolidated a little bit more. Usually in normal conditions, it shouldn't have done this. It should have been quicker. But because we're approaching the holiday, it's very, very slow, very, very choppy. So it consolidated a little bit more. It was overzealous with its retracements. And then it got above these highs again, consolidated more, left more liquidity at the highs, got above that again, leaving a lot more consolidation for that last hour, where price got beneath all these relative equal lows and it expanded to the upside very quickly. And you saw that a lot in the last hour, price being very volatile this week. But not just the last hour, but also London session. If you go back this week and you backtest the London session in the last hour or the afternoon sessions, you're going to find a lot more success, in my opinion, because it's just easier to trade those sessions, since the morning usually is the most popular one on holidays or on seek and destroy days. It's best for the algorithm to make its moves to expand it easily and lightly at the times of the day where there's likely to be the least amount of people, and it would still make some sense. Like not during Asia, because usually everything is closed during Asia. But yeah, that's the Thursday there. Sorry, Wednesday, and then now we have Thursday. Okay, so Thursday. Look at Thursday. It was not good. There's a lot of wicks. I know people may have encountered nightmares on this day because this does not look pretty at all. But you have this order block here. The price comes back to at the end of the day on that Wednesday, and then consolidation overnight, dipping right back into that order block above this high, which is the beginning of the consolidation, and then reversing lower to go where? To these lows, and that's it. It stops. And notice too, when you leave on this hourly chart, when you leave a swing high, okay, you have each swing high. Every time we get above or below a swing high or low, you see a reversal. So you have like this one here, reversal. Okay, then we leave that one there, reversal. And then you get that one there. Well, this one, that one, that's 9:30 open. Gets above it, retraces. Gets above it again, retraces. Again, retraces. Gets beneath this swing low, reverses. And then again beneath that swing low, reverses. So it just does that over and over again on these days. This is a London session. And what do you see in the Asia session? We come above the Asia high, clear that liquidity out, and we expand below to the Asia low. Now this London session wasn't bad. It was not a bad London session at all to be trading. The volume might have been less volume, worse candles, sure. Price action may not have looked as clean, but it was, but the in the way it delivered was definitely a lot cleaner and smoother. So you have this run-on stops at that low as we dip into this order block, retracing into the Asia range, and then we get above these run-on stops here to reverse, retracing a little bit and expanding one more time, coming back into that range after we leave it, but not really staying in it. Bodies are really staying at the low end of the range and expanding one more time to finish off the Lund session. And then as soon as we get above that high, right, we've had a range that 930 open went all the way down to these lows, cleared out the lows, and then clear out the highs. When you see that, anticipate a consolidation. So that's what happened. It just consolidated. Now, I did trade this day, believe it or not, but you see the 15-minute fair value gap there? I see prices finding support here, 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 930, you could say, sure, and then here. And as soon as 930 open came above these highs there and above this high over here, back into the order block, I anticipated there to want to move back into the mid-range of that consolidation. And that is what happened. I did try and go short here on that fair value gap, and the price came back up one more time. That was my mistake. It ticked me out almost by the tick, and I lost that trade. So I did lose a trade this week, and it ran in my direction. I was waiting for a retracement back into this range to get another opportunity. The retracement came later, so I decided to just go for a long instead to retrace into that range instead of shorting the retracement, because I could tell that it wasn't really going to. I wanted it to retrace like as soon as it got beneath that low around here. When it really started to show its hand lower, I'm like, okay, it's in discount now. So if you look at that range from this low all the way to that high, and you draw from 0 to 100, and you take 50%, in these conditions, every time price gets to 50%, I'm looking to get back above 50%. When it gets above 50%, I'm looking to get back below 50%. So I was being very small and nimble again on this. Have been all week, but I was being very nimble here. I looked at this low, another low here, another third low there. Those three lows being left in this low, driving into the fair value gap, and seeing an expansion. This was okay. If it's gonna retrace, it would be here, and then I got in for a long, sold where at that low. Why that low? Because that's the order block. Okay, so that on the 5-minute chart, you see a up close candle there. That's the level I was aiming at. Okay, I was aiming at the wick low, which would be that wick, not necessarily the body, because sometimes it'll just get into the wick and not go to the body. But yeah, then it hit, retraced, consolidated, and went the other direction at 12. Notice how lunchtime it started to move again. Right? I'm sure that's random, but no, it's not. If you go in price and you look back and you study price action, that happens very often. 12, something else happens, and then it goes the other direction, or it starts expanding in one direction, or gets out of consolidation. But yeah, that was the week. Had a fairly decent week. Definitely could have been better price action, that's for sure. But some weeks are like that, and if you've taken a loss this week, it's nothing to worry about. Don't beat yourself up over it, because there's going to be better weeks. And instead, look at what you did wrong this week. Look what you could have done differently. Look at what happened, and study this week, because in these weeks, that's when you really get to. It's like a testimony. You really get to figure out who you are, and if you are a mature, responsible, successful trader in weeks like this, because they do cause losses. And yeah, that's all.